What is going on in the market? You said you had your finger on the pulse in different markets. What's happening?
We stuck to our guns on a lot of deals. We're still struggling.
I can't tell you when cap rates are going to come down. I can't tell you to what level interest rates are going to come down, if they're going to come down. The easiest way to buy in LA right now is buy these new deals.
Yeah.
Did grow what we think considerably, and we're happy with our growth, and I think we'll be okay coming out of it.
With a look at the housing trade, the home construction ETF, the ITB, it is tracking for its worst month since 2020.
If we can get there, it feels like LA is just waiting to explode.
I believe that downtown will come back. You know, a lot of people may not believe that.
Mm-hmm.
We're going to have the Olympics. We're going to have the Super Bowl. We're in the middle of the entertainment industry.
There's so many bright spots. Welcome to the podcast. My name is Taylor Avakian, No Vacancy. And today we have two esteemed guests. Very happy to have them on. Far and David.
Yep.
Thank you guys for being here. We're excited to get into some quasi-institutional space,
Sure.
which is what you guys really kind of play in. Mom and pop, where a lot of you guys started. Value add, which is where I'm at.
Totally.
And we're going to talk about everything real estate. So appreciate you guys. This is a collaboration podcast, actually.
Yes.
First of all, Deal Flow Friday over
Deal
here.
Flow Friday,
I know,
No
I'm
Vacancy
excited.
collab.
First three-way podcast. And,
But you're hosting.
I'm going to host this one.
Maybe you'll come to Miami and we'll host.
I
you
know.
on
Shoot, I've never
Deal
been to
Flow
Miami.
Friday.
Let me come to Miami too.
Yes,
I might not
any
be
excuse-
on the pod, but
Any
I'll meet you in
excuse-
South Beach.
exactly.
I've
Any
never been
excuse
to
is good
Miami.
too. What?
oh my gosh.
Never been, man.
It's the funnest place.
Everyone said, especially during COVID, people would,
Yeah.
I had some friends who were just like, I'm getting out here. I'm going to Miami. Goodness gracious. 11 looks incredible. I'm just going to say.
It is a fine
No
establishment.
comment.
And not even,
It is a fine
not even for
establishment.
like but just, the art of what
Yes,
that is.
It's a great concept. It's a great concept. And there is more to Miami than 11, but you got to always
Shout out.
pay your homage
Yeah.
to, yeah,
I mean, look, it looks like a very fun place.
it is.
So
it is.
I will be going there if I go to Miami, just FYI. Okay, what I want to talk with you guys about, one is I want to figure out how you guys got into real estate, because that's always an interesting story to me.
Yeah.
Not like, I saw a guy do this and that, but what I want to understand and figure out is, okay, how did you get in? And then what has that experience been thus far from perception to reality? Because a lot of people want to get into real estate who listen to this and or are in real estate just starting out. So I kind of like to throw the journey, because you both are working at an institutional firm and also do deals yourself. So it's kind of this very interesting situation.
Sure.
So if you wouldn't mind telling me.
I think we'll do elders first and then kind of go chronological,
Fair enough.
right?
Fair enough.
So-
Far, how'd you get into real estate?
So I'll say, look, the thing that first, I was going to USC, living downtown, and downtown changed so much when I was there in early 2000s, and you could just see how much it was impacting the city. And you wanted to be part of that change. And I wanted to know the people who were doing it. I wanted to be part of it. I wanted to be around it. At first I wanted to do hotels and retail. That was like either hotels or retail, and spent some time doing some hotel type of work, very little time. And GFC hit almost immediately. And so hotels made no sense from 2008, 2009, 2010. Retail was, like offices today. And for a while, I was doing non-performing loans, which was honestly...
Were you at a firm, like a bigger firm, or were you,
Yeah.
what
I was selling non-performing loans at auction.com. I was like one of the first employees at auction.com.
No way.
Actually, how I met Max, we could talk
Yeah.
about that later. I was at Standard & Poor's, Duff & Phelps before that. That was a boring job. But, in 08, that was the kind of jobs that were out there.
For sure.
And I was selling non-performing loans. The saddest thing about that was you saw people who were doing everything right and they weren't catching a break. And it's like, hey, once this tenant comes in, I will have enough to refinance this out. And this tenant is interested, did their fit tour, we're going to be good. Then the next month comes by, these 3 tenants blew out, and so when we talk about things being bad now, they're not that bad now. And I was just getting started then, but you could just see.
You could feel it. It's a different time.
And
man.
just seeing that, not being in it, but
Yeah.
seeing it has impacted my career majorly. I think David could tell you is, the guy who's always talking about the downside,
Yeah.
which is
Yeah.
not always the fun guy.
We always say Farhan's the bear.
You need
Max is
one
probably
bear.
the
You
bull.
guys are- yeah.
Max is
Yeah.
the bull.
Yeah.
Farhan's the bear, which has saved us on a lot of stuff too.
You have to have both.
Yeah.
Really.
Absolutely.
And like partnerships.
Farhan told me a story that's resonated with me, that one of his first days in like your first job, he had to go into all the models pre-GFC and adjust them to what actually happened. And it went from
They
like
were Lehman models.
yeah,
Brothers
Lehman models. And
Yeah.
you were just adjusting them from, positive rent growth to negative rent growth. And he's like, that really stuck with me. And that stuck with me as well. I didn't live through the GFC, obviously.
Yeah.
I was in high school, but that's something that you remember for the rest of your life.
So that's so interesting to me too, because I think scars are what make us, right? We learn from trauma, quote unquote, and then it affects the way that we look at business moving forward. And then you
Absolutely.
can take some things from different people, but someone who's gone through like one of the worst recessions in history might have a little bit different perception on deals and what's a good deal, what's a bad deal, where's the downside from this than someone like you or me who were not in that space, right? We might have a little more positive outlook. Oh man, the rents are going good. The population's growing here, right? Like, and you're over here like, well, if Tesla leaves, like all these rents are going to come down, whatever it is per se. But I think it's good to have that perspective and be able to have that experience too when you're working as a unit, which previously I've talked about a lot of times, is like having a team of people that you can lean on, bounce ideas off of, brainstorm, figure out, okay, what am I missing here? Or
Yep.
where's an opportunity that maybe we don't see, but you can see because of your specific experience. I think that's a great way to go about the business. And obviously you guys have done it.
And we could only control what we could control, right? You don't always see you don't, or often don't see what's going to come. But if you know the deal, you understand the deal, it's like, we always talk about the untrended yield on cost.
Mm-hmm.
That's our North Star.
Some people
Yeah.
threw that out the window in 21, 22 because
When the rents growth.
yeah,
Yeah.
and made a ton of money doing it. And, David and I were just talking about it, and we were, at that time, we were like, are we the dummies not buying this stuff? Because those guys are making a bunch of money and we're scratching our heads.
Okay, let me ask you something. I'm going to put the scenario. So you know what you know now, right? You're a company, let's say it rhymes with rides, right? And you're raising and doing a bunch of deals. You're crushing it. You're absolutely crushing it. And you're maybe not doing the unlevered yield on cost. Would you go back and do what that was? Would you do what they did? AKA, does that make sense?
Can I just say something too? What rhymes with rides?
Yeah, we can say it. I mean, they're
yeah.
fine.
Tides is like the poster child, right? But a lot of groups are going through it. It's really not just them.
Yeah.
Ourselves included.
Yeah.
We have floating rate debt too. So, they're the poster child, and everyone wants to talk to them, and they grew fast. And I know Sean personally, but even if I didn't know him, I would say this objectively, like everyone's going through it. And so when you say, would I do things differently? Yeah, hindsight's 2020, you would buy a longer rate cap, you would buy fixed rate debt, but you wouldn't necessarily, with the knowledge you have, be able to do something differently. We stuck to our guns on a lot of deals through the untrended return on cost North Star that allowed us to not buy deals that we shouldn't have, and we're thanking ourselves for it.
Mm-hmm.
And it saved us on a lot of deals, but we're still struggling because we put floating rate bridge because we're value add guys, and we knew we can move the NOI 30-40%, which we did.
Mm-hmm.
So that's just not enough in this environment. So we're surviving.
I mean, fixed rate was the biggest thing. It's hard because the floating rate loans were cheaper,
Mm-hmm.
more leverage. Most of what we borrowed was 65 to 70% of cost.
Mm-hmm.
Didn't feel that crazy. But
You're conservative at those numbers back then.
yeah.
We were conservative doing bank bridge 60 LTC, and we lost to a lot of groups doing debt fund high octane bridge. So I guess we were like the conservative ones. But even on those deals,
We did buy a lot during that time, and a lot that we're working through.
Sure.
I think if you bought anything in 21, 22, most likely you're not making money.
Yeah.
At least in most of the markets that we're in, but I think probably everywhere, right?
Mhm.
And so we're not here to say like, oh, we didn't do any of that stuff. I think, one thing I noticed is like, we bought a deal that's coming up for refi right now. We bought it for $300 a door, and we were really excited because the deal down the street, they bought for $360 a door. We bought this for $300 a door, and they were basically very similar deals. Well, guess what? Our rents, our debt's coming due, and now we have to figure it out.
Mhm.
They put 10-year debt on, don't have to worry about it for another 7 years. And it seems like that might have been one of the, that.
Totally.
But I will say also investors wanted to see the higher returns because
Yeah.
if we put the fixed rate debt, we're still young,
Totally.
I'm the old guy here and kind of the old guy at Trion, but I'm only 41. They wanted to see the low mid-20s, right? Like I remember we sold a deal in the Bay Area for, I want to say it was like a 26 IRR in Hayward.
Jeez.
And a lot of investors who invested with us also invested in Tides, and they had gotten a 118 IRR check from Tides like the week
Holy
before,
crap.
and weren't so happy with the 26 IRR.
Which
that
is
we-
crazy. Looking
gave
back
them.
on it, you're like, wow.
I mean, Tides was doing 2x. I don't quote me completely, but they were doing 2x in like a year or two.
Mhm. And we had a overlap on a lot
Or
of
3x
investors.
in a year or
We had
two.
an
Yeah.
overlap on a lot of investors. Like what Farhan said, we were being compared, and we just stuck to our guns end of the day with a lot of deals, and it may have not grown as quickly,
Yeah.
but we did grow what we think considerably, and we're happy with our growth. And I think we'll be okay coming out of it.
And I didn't even give context. Can you guys talk a little bit about the company a little bit and like what you guys
Yeah.
do?
Sure. Yeah. So Trion founded 2005, Max and Mitch, longtime buddies. They, one's at was at Marcus, Max was at Marcus, Mitch was at HFF. They joined forces, built out a portfolio, sold it right before the GFC, then started buying non-performing notes and REOs collateralized by multifamily.
That's how we
they
met.
Yeah,
Mhm.
Jinx. And great stories there. And once that market dried up, started reverting back to rent control, LA, SoCal, NorCal, started expanding up the coast. Farhan then also led the way to expand into Oregon. And I think we were the most prolific buyer at one point in Oregon.
Yeah,
in Portland.
we bought about 26 deals in the Oregon Metro. We've exited, I think, 17 of those deals, something like that.
Wow.
Yeah, and I joined like 2015, so almost 10 years ago. That was when we had about a few deals in Oregon and some in NorCal. I think we're
What was your assets under management at that time?
I think it was like $500 million, maybe
Okay.
something like that. Now we're like 1.5,
Yeah.
depending on what valuations you
yeah,
use.
sure.
Yeah.
Sure.
It was probably
so we've
2,500
tripled.
units, and we're 7,500 units.
Yeah.
So
Wow.
Yeah.
tripled either way.
So you guys have
tripled.
grown like exponentially.
Yeah.
And that's since Demo joined.
Exactly. So then about right before COVID, we decided to make a push to new markets, Colorado being the target. And that's where Farhan and I tag team that market. It's the biggest state we own in Colorado. And then after COVID, we opened up the Miami office and started buying throughout the Southeast, Florida, Georgia, Carolinas. And I moved about a little over 2 years ago to run East Coast acquisitions there, Farhan running the West Coast. And now we have a great lens nationally. I know we're not in the Columbus, Ohio's,
Sure.
and that's what everyone's talking about, but we have a really good sense at this point. We were just talking about this. Of,
7 states.
yeah, 7 states. Like we have
That's
a really good pulse
Yeah.
nationally of like what's going on.
100%.
So our context, we have more context when we're talking through markets. now.
David and I compare a lot of notes all the time.
Yeah, we're talking a bunch, and
Well-
we're in the weeds on all our markets. So it's like really cool to see how, and pre rate hike, everything was basically solving to the same. So now that rates have hiked and things have kind of reset, it's really cool to see how things are pricing now. For
Okay,
different
so what
reasons.
is going on in the markets? Like, give me you said you had your finger on the pulse in different markets. What's happening?
It's a loaded question.
I mean, one thing that's interesting, 1980s deal in Dallas will trade for a 5 cap most of the time.
Yeah.
Right. But you could buy, I mean, and this is what's interesting. You could buy a new deal in downtown LA or like a 10-year-old deal in downtown LA for close to 6 cap.
Mm-hmm.
And downtown LA, you know, the supply is starting to dry up. Obviously, they have the concessions, they have some demand issues. Hopefully
Sure.
downtown LA comes back.
Yeah.
You know, I love LA. I live
Me too. Long
and,
LA.
And I believe that downtown will come back. You know, a lot of people may not believe that,
Mm-hmm.
Especially with this Olympic push and all that kind of stuff. And so feels good to get 100 basis points for a bet on a property that is 35 years younger,
Mm-hmm.
you know, at a basis that's probably close to 2016 basis, you know, and Dallas is a tough market to operate in right now, you know, most supply, lots of vacancy, lots of delinquency.
Well, there's nothing stopping people from building something right down the street.
Yeah, I would say like where Farhan and I are agreeing is like we're both in favor of out of favor markets right now, like the LA, Bay Area, Oregon. For me, we just closed a deal in Atlanta,
Uh-huh.
and that's a pretty out of favor market
Yeah.
with some of the delinquency issues. And we bought an early 2000s deal at a 6.25 cap. Good quality, and the rent comps are institutional owners.
And debt was cheaper when you bought it too.
And we
which is
bought
even
locked in
better.
a low 5 rate. Exactly.
So very positive leverage on that deal.
Yeah. And so I think you're going to get cash flow, and everyone's paying rent, and occupancy is strong at that property, and it's going to be cash flowing, and you can get appreciation when those out of favor markets, the tides start to turn.
100%. The pendulum swung almost too far, it feels like, where the high growth markets, the steady long-term West Coast coastal markets who historically had big gaps in A, B, and C class, I've seen that compress significantly, where you can buy a 2016 built building for $350 a door, and you can buy a 1980s building for $275 a door, $300 a door, and you're like, wow, that's, you know, there's a big difference there too.
Totally.
And that's effective. So you're seeing that across the portfolio, and really that spread is changing for markets that are historically stronger or not as strong.
Yeah. So like kind of back to what Farhan was saying, people want to buy in, I guess like syndicated high net worth investors, because we have over 1,600 active investors. They're looking at the Dallases and the Miamis and these places, and they're great markets fundamentally, but we're starting to see a point where maybe some of these out of favor markets that people used to say no to are starting to have some really compelling yields.
Yeah.
Like what Farhan was just saying, 100 bip delta for new construction in LA. And LA is a standalone market.
Yeah.
You know, this isn't a tertiary market. This is a standalone prime market. It has political risk. It has its issues, but for 100 basis point expansion in yield, it's pretty compelling.
And by the way, this deal, the average income was $187,000 per unit that I'm talking about in downtown LA.
Mm-hmm.
The average rent was right around $4,000 per unit. So the rent to income was good. There's a lot of things to like about it. Now, the political risk, which I feel like comes up on
we can't not talk about it.
Every episode
real.
has it.
It's real. Like that's a real risk.
Yeah.
And that's why I think it's hard to do value add in LA. It's hard to buy older in LA.
Mm-hmm.
I think I don't want to, things can change, but
Your opinion, right?
the easiest way to buy in LA right now is buy these new deals.
Yeah.
9 deals hit the market this week. I think 10. Blake just came out with a 10th deal in LA this week, and they're all new. And Koreatown, Hollywood.
We were tweeting about
it. It felt like we talked about it
separately. You guys tweeted about it.
I'm like trying to get more active on X. Farhan's been on X for forever.
Yeah.
Nobody reads my stuff.
But I wrote it. I read it. So it's like almost as if we had a private conversation on
That's
X.
so funny.
But yeah, go on. You were saying
downtown LA, Koreatown, Hollywood, as you know, probably as good as anyone.
Yeah.
Impaired markets.
Mm-hmm.
Hopefully come back.
Yep.
You know, what are people willing to pay for them, especially when they're all out at the same time? And is there enough institutional interest to take all those deals down? It would be really interesting to see, because generally when we take LA deals to institutional investors, they read it like they read the email half the time. You know, it's hard to even get them to really pay attention to it.
It's almost like this. They've blocked out red X, like don't even
The
send
headline
me.
risk.
It doesn't matter how good it is. Yeah, it's
Totally.
just mentally they can't get past the political risk that's associated with, which is quite interesting because a lot has changed in LA with the fires, and people are not happy with the way that it was handled from a government perspective, and what's happening on a national level too. It feels like there's a chance that California could swing, further, I guess, towards not so extreme left at this point in time. And I'm curious to know if that changes any of investor sentiments about Los Angeles and California. You guys obviously doesn't seem like you're seeing that right now.
I mean, how we react to what happened is going to be important.
Yes.
And look, the least important thing is how investors feel about it. The most important thing is that we put the differences aside, do what's best for our city.
Totally.
And, to take a second out, the reason I'm wearing this LA hat is I've been very proud of our city, on the people of our city, right?
Mhm.
Like my wife and I have been volunteering. Those places are packed. The people who haven't lost homes are helping the people who've lost homes.
Mm-hmm.
And, it feels like LA's coming together. It's important for us to come together, decide where our future is going to be. It's got to be easier to build. It's got to be a little more business friendly.
If we can get there, it feels like LA is just waiting to explode.
We're going to have the Olympics. We're going to have the Super Bowl.
Yeah.
We're the middle of the entertainment industry.
There's so many bright spots,
We're the king in diversity.
right?
I went to a Somalian restaurant the other day. That was fantastic.
Yeah.
LA is a special, special place.
Yeah.
And it was funny when I was visiting David, Max, and Mitch in Miami. Everyone in Miami loves to tell you what's happening in Miami. Like everyone's just collectively excited.
Mm-hmm.
And then I came back to LA and everyone's collectively kind of bummed out with what's going on. And I think we need to kind of focus on what's good and hopefully collectively be excited. Hopefully help the people who lost their homes in the fire,
Totally.
help those areas grow, help those people. And I think it's key also with the fires. Don't just do it for the 2 weeks.
Mhm.
It's going to take years
Yeah.
to build
Mhm.
these things up.
Yeah.
And so,
I mean,
donate your time in the food banks, at the shelters. Right now, they're pretty hard to donate your time to because everyone's doing it. But
yeah,
we're going to need it for years.
it's gonna be a long process. And what's obviously the Phoenix, right? What gets burned down comes back even stronger. I mean, there's gonna be brand new cities in Los Angeles, like brand new.
Yeah.
And it's going to be very interesting to see from the perspective of the sentiment of people. And I agree with you. Right now it feels like LA is coming together as a collective unit, and we need to do it longer than a couple weeks, right? We
Yeah.
need to continue to do this for the foreseeable future. And if we can have that collective unity, that mindset of helping each other out and bringing each other up together in this, which I felt over the last 10 years become even stronger, is this duality of political or not even tenant owner. They're like moving farther and farther away from each other. And if we can get back to like, hey, let's all try to make this more livable, easier, more enjoyable, then I see Los Angeles just like exploding.
And I feel that's the silent majority for Angelinos.
Good point.
And I specify silent because you hear the headlines of
Mhm.
the bad apples that are, an arsonist or this, or the silent majority of Angelinos love this city.
Yeah.
As someone who's been living in Miami for a couple of years, but born and raised in LA, I'm proud to be an Angelino,
Mhm.
and it's painful to see what's going on from a distance. But everyone loves this city, even if they don't agree with the politics or whoever's running it. They love this city and they're
Mhm.
proud. And it'll bounce back. It'll
Yeah.
bounce back. I'm sure of it.
I
By the
agree.
way, on that note, not to make this, just on the fire, but the headline is landlords are price gouging. My experience is landlords are trying to help.
Yeah.
The
Mhm.
landlords are trying to help.
100%.
Well, I helped a lot of friends in the Altadena area try to find places in Highland Park, Glassell Park,
Yeah.
whatever those areas. And, people like Moses Kagan were like what can I do?
Yeah.
You know,
100%. Same thing for the agents too. Like,
Our chat, the
Oh,
LACRE chat.
yeah,
I don't know if
man.
that's
I know
but
for sure.
everyone is super helpful. And I really haven't anecdotally seen any bad activity there. I'm sure there might be something, but I haven't seen it. And people, again, the silent majority is really trying to help out. That's what's special about the city.
100%. And I want to parlay that into what opportunities you guys see moving forward on a broad spectrum. And this could be obviously East Coast of what you do, West Coast of what you do. Like, where do you see the opportunity moving forward with a lot of things changing in this market? Where are you looking to capitalize on it and make the most of it?
Sure. Look, it's really hard right now, right? Like we don't know where interest rates are going. And so there's not like a, pure path to growth. But right now, what I think is most interesting is, at least on the West Coast markets, it might be different for David's markets, is, well, first off, value add is really tough right now.
Yeah.
It's costing more to renovate a unit, $17,000 to $20,000. We're seeing a lot of times that's only getting you $100 more in rent.
Wow.
Like it's rarely getting you the, what was the rule we learned when we first started? Like 20%. I haven't seen that for a while. We're not getting $400 on the value add renos. And so you either need properties that are severely mismanaged or maybe passively owned. Mismanaged isn't the best.
Haven't raised their rents every 3-4 years. So I'm like, and there's a lot of those.
They've owned it for 25 years and they've made their money and they've, kept the buildings full and have done their job to get it to the point it is now. And those are opportunities for us to, go in, fix the physical problems of the property, go in, push values, push rents. That typically is happening in the $5 to $15 million range or the $2 to $10 million range right now. The institutional property value add is very hard to see, but that could change. And then I think like David and I were talking about this, like, what were we talking about yesterday? Where, buying these high-rise towers that now are $750 to $1 million plus to build that are never going to be built again. Or sorry, not never, but not for a long time.
Yeah.
And I'm specifically like thinking about Portland, Oregon, and the Pearl District has some of the most beautiful high rises, and you could buy them for $350 a door.
Really?
And the yields, like still like
but
like a
the
4
just
replacement costs.
like well below replacement cost product. I think that's the play.
And
right
Portland's
now.
been hit hard, and so the high rise one bedroom's $1,500. I wouldn't be shocked if that one bedroom was $2,000 in 4 to 5 years.
Yeah,
right.
100%.
And so, and no one's going to compete against that AA product. Those deals are hard to underwrite because you don't know when the growth's going to come. You're going for growth, cap rate compression. I can't tell you when cap rates are going to come down. I can't tell you to what level interest rates are going to come down, if they're going to come down. And I can't tell you, we can guess when the growth's going to happen, but I can't guarantee it. That's why I kind of like the value add, because I could tell you where we're going to take the rents to. I'll tell you what the expenses are, and I'll tell you how much it's going to cost. That I could tell you, And so, small, middle market, mismanaged deals and kind of core below replacement deals, and like in markets that are, Portland's not the hottest market.
So out of favor, maybe markets.
Out of favor,
exactly.
Yeah,
you think that it'll rebound, it'll come back. I'm curious to know from you guys, when you've competed over the last, let's say, 18 months, when interest rates have been high, have you seen an influx of family offices who are they don't have a timeline, they don't have investors to appease to? Are they buying these just low basis deals that maybe you're hard to see an IRR return on, or not know when things are going to actually turn itself around, where they're willing to take the risk and buy something at 50% of what it was a few years ago?
Yeah. So I'll just give a story briefly about 4 investors yesterday emailed either me or Max or Farhan that are not, they invest in real estate, but they're not operators at all. They're just have another business and trying to passively invest, asking, do you have a deal? Where's the next opportunity? There's a lot of optimism heading into 2025 as a deal junkie,
Mhm.
it's a little bit pessimistic because of where rates and treasuries are at relative to where things have been trading the past year. So you're thinking to yourself, man, how are we going to make this deal pencil when deals are trading at this cap rate and rates are now at this rate? How is this going to work?
Mhm.
But there is a lot of liquidity and optimism, like ready to pounce right now heading into 2025 that we haven't really seen in the past couple of years. So I think with that said, you're definitely seeing people see beyond the smoke and mirrors to see, all right, this is a good time from a long range 5-7 year holds to be buying right now.
Yeah, it feels that way too. When the experience of us where it was, the hard part about being a broker in 2018, 19, 20 was getting a listing, right? Like that was hard. And I've started out in the beginning too, so it's hard there. But once you get the listing, you're like, oh, thank God. Like I made some money,
In a
right?
bull market, it'll sell itself.
Like it's going to sell, right? Now I'm turning down more listings than I would care to admit because the time, like if you're not realistic, you're not going to meet the market.
Yeah.
It is not worth the time. And I have to go out and pick up the phone and call people because not everyone they're like, I'm going to take a break, right? The traditional guy who interest rates were low, just making it, money was easy to come by. We'd have 15, 16 offers.
Yeah.
I've struggled on 6.5 caps, 7 caps, getting 4 or 5 offers, right? And that sounds crazy to you and it's different markets, but it was the reality of the situation. And it's so interesting to see the sentiment because I try to track it as best I can of, okay, who are the people that I need to be sharing these opportunities with? Who's active? Who's
Send
in
me
the
your 7
trade?
caps.
Yeah. I think I think that's what Farhan was alluding to. Whether it's LA or parts of Oregon and Portland, there's these out of favor middle market deals that you're starting to see some really compelling yields,
Mm-hmm.
and they might be mismanaged. They might just be out of favor. It's maybe a combination of both, but there's some opportunity there just from like a cash flow perspective.
On a whole, how far off are you guys on underwriting on the current deals? Like when you're looking at your spreadsheets, are you 10% off list price, 20% off list price? How close are you?
The issue is at this point on the institutional space of like these markets, the list price is really whatever the seller says, like, we need to just hit this. And so there's not really as much of like a rhyme and rhythm of like where these things are being BOV'd at. Like there is at this point a little bit, but it's more of like, can I cover my bases to a certain point, or can you create a market for me? And then what happens is maybe they don't sell, but they get recapped, or there's other rescue capital and they've created a market to at least know what the real value is at that point in time. And there's just been so much volatility on the debt space that valuation can change any second.
I've also noticed brokers don't really want to give a whisper as much anymore. They're like, look, they really want this number, but
Yeah.
I know you know what it's worth.
Yeah.
Like, just tell me what number you can get
It's
to.
tough. It's really tough because it's hard to tell someone like this is a really good deal when you yourself don't even know what's going to happen, right? Because we have to be promotional about the assets we sell.
Yeah.
There's a certain level of, like objectivity when it comes to selling an asset, but people hire us to go be promotional. And a lot of times they've put hard-earned cash, energy, like they want someone to paint the picture of what this could be. And that's part of our job in marketing these assets. But it's hard to, when you're looking down the barrel and you're like, I don't know how you make sense of that. I don't know who buys this thing.
I mean, I think it's interesting that you said you're turning down listings. I recently had a conversation with a broker in a different market, and they said, should I just take it even though I know it's priced too high? Because what if they take the lower price? What if because I didn't take it and this guy worked so hard on an impossible task that they give it to him later on a deal that I sold the guys? I don't want to lose it, but I don't want to look silly taking a deal to market that isn't tradable.
100%. And I think, I don't necessarily have the answer, but how I would approach that situation and what I've been trying to do is like, here's the open kimono. Here's what the situation is. Here's all the numbers. Here's all the facts, right? Here's what we're up against. Now, as long as you're on board and we're on board and we both agree this is the assumption that we're going to do, it's going to be a tough assignment. Like, we're going to go out there and give it our best. There's a certain level of investor, in my experience, where they don't necessarily have that same sentiment and they want a different kind of, they want someone to promise them something, even though they know it's not true.
Yeah.
They want them to feed them candy and tell them lies. Like, they want that, right?
Everyone's looking for the hope.
Yeah.
I think one of the ways to be open, Komodo, as a broker, and we've been doing that with our broker relationships when we're looking and evaluating deals, is like, we track every single deal that trades in our markets, and we're
And
not
doesn't trade.
Yeah, and the ones that don't trade, exactly.
Mhm.
And we know where the high bid was.
Where the high bid was, who it was, the bid-ask spread, how many offers. We're also on the deals that did trade. We look at also when they went under contract and like what the treasury was at the time and like how they're financing it. And you don't know the exact interest rate, but you have a general indication of where rates were at the time, that you're like, okay, well, if rates are here and it traded here, then that's kind of the type of spread or positive leverage. They bought it slightly negative or positive, in order to understand, like, all right, where can we triangulate where these values should be coming from?
Okay, this is an interesting question. I don't know if you feel comfortable answering this, but I'm curious.
Sure.
When you see a group, right, who maybe you compete against on some stuff, and they buy a deal like that, where you're tracking it and you're trying to figure out where the interest rates are, is a certain part of you like, let me go find out who that investor is? Where's that equity coming from?
Because we know for the most part.
where all the equity is from most of these investors.
To a degree.
To answer your question, we're trying to figure out who the equity is, and we'll probably call them.
Yeah, that's what I'm saying, right?
Yeah.
Like,
We'll find
just
out.
like you, just like
We'll find
where
out.
the opportunity is, because like, if that person's willing to invest in that, and because it really, you can do a deal if the equity requirements are low enough.
Yeah.
Like, if someone wants a 1% return and they're cool with that, like, I'll go buy every deal in Los Angeles. Right. It's how much the money costs you, or the equity costs you.
Absolutely.
Which is really a big driver. So for you guys being competitive, and this leads me to my next question, it's like, what makes a institutional firm, a syndicate firm, a fund, what makes them differentiate or competitive and sets them apart from everyone else?
Like for Trion, you're saying? Like
For what perspective? From
like, why, what makes a good firm versus a decent firm that maybe got lucky with the market?
Well, I would just say, like, in Trion's position, what's nice is we have a lot of ways to capitalize a deal to get it done. We don't just have a fund, or we don't just have a JV partner. We have both. We have family offices, foreign capital, and they all have their different buy boxes and different criterias. So we can be competitive potentially on an older vintage, or we can be potentially competitive on a newer vintage, because we have different ways of getting the deal done and capitalized. Obviously been a challenge in the past couple of years. It's been tough raising equity. Anyone telling you otherwise is lying.
Yeah.
But we have been competitive through the 1,600 plus active investors in picking our points and diamonds in the rough to get it done. So I think just having multiple diversification of equity sources is what really helps you have a competitive edge when you're bidding against deals.
Ultimately, when people, and different perspective on it, ultimately when people give you money, there might have been a window where it was because your deal was so good, but ultimately they're trusting you. Yeah. Whether it's the doctor who gives you 50,000 or JP Morgan who's giving you a 300, they're trusting that you're going to do what's right. You're going to be transparent. You're going to be straightforward, and that you're going to do what you say you do. I think in business, ultimately, that's what everyone wants.
Totally.
To work with someone who does what they say they're going to do.
Yeah, 100%. Because everyone makes mistakes, right? You're not going to hit it out of the park 100% of the time. You're going to have down years. You're going to have up years. But if you're an honest person and you do what you say you're going to do, I mean, we all want to work with people like that. I think that makes the most sense from a longevity perspective too, because this is a long game. Like, real estate isn't, sure, you're making those 2x returns in a very short window and you can capitalize on that. But the real money, the real long-term game of this is, okay, 5 years, 10 years, 15 years, 20 years. Let me keep those relationships. Let me build that. Let's build together and make that, into something that's pretty incredible.
100%. It's all about life's too short to do business with people you don't want to do,
Yeah.
and you want to do the deal. There's so many deals to go around. It's all about doing it with the right people.
I'm curious to know how you guys structure deals. Like, what is your structure, and is that proprietary, and or how do you look at what that split is, returns, waterfalls? I want to know the details of that.
Sure. I mean, ours is pretty basic. 8 pref, generally somewhere between a 75-25 to 70-30 thereafter, with an acquisition fee and an asset management fee.
Do you skew heavier on the fees in the beginning, or would you prefer, I guess, more of a philosophical question. Do you find that investors are okay giving fee points versus the back end upside, or do you feel like they would prefer less fees and you guys get a bigger share of the upside?
The latter. You want to, and we're okay with that too, because we want to get paid once we've performed what we said we were going to perform. So that's how qualitatively our deals are structured. We have fees to keep the lights on, to pay for the transaction and the work being done, and to keep the staff in check to manage the deal. But at the end of the day, the real money is through the promote, and that's not seen until the hurdles are met.
And that's market, or it's market to have the, back end promote.
Yeah.
I'll say I think there's something inherently wrong with that structure, right? Because we shouldn't have to sell a deal to make money. I think
that's a good point.
I think the structures that allow the GP to participate longer term and, hold the deal longer. And
let's talk about that.
I'm trying to figure that out right
now.
Like
a crystallized structure.
So I've heard of a crystallization.
Or a cash flow,
Yeah.
Gosh, I've been talking to a lot of people about this because I think everyone wants to hold for
what is the
forever.
best? Yeah, like if you didn't have to feel like you were forced to sell, because I think
we're forced to sell. Our structure forces us to sell.
Yeah, how do you set it up?
Money.
How do you set it up where you're not forced to sell and you can both be aligned in this? Okay, let's try to make this thing long term and both become wealthy. What do you guys think that setup looks like?
There was one sponsor I talked to recently, and he has a minimum equity multiple, but he participates right away. So he participates like a 90-10 out the gates. Now, a lot of investors might be nervous because there's no pref and that kind of stuff. Goes back to the trust. They do that with him because they trust him. His minimum multiple is something like 2.0, but he's got 10 years to get there, or maybe 7 years to get there. That makes sense. So you're making money day one. Then you never have to sell that asset because you're always making money. I think the other way is to have a cash flow participation over the pref. So let's say your pref is 6. Let's say it's 6. That's actually a more reasonable pref.
Yeah.
Like 8 is really hard.
I was gonna say
cash on cash to get.
You ain't doing 8 in LA.
Not out the gates, and maybe one day.
Yeah.
But let's say you get to 6 and you get to participate over the 6, and let's say in 7 years you're at a 10 and you're participating over the 10, then that's pretty good too.
Yeah.
And you can actually hold on. There's a crystallization that you talked about. What people used to do was they'd refi all the cash out and get to participate in the promote. That's not an option.
Those
right
days
now.
I haven't seen those in
maybe
a while.
one day it'll come back.
Yeah.
But
just because refining, you don't get the money out that you need.
You can't get lenders stop giving 100%. And then with rates in the 6s, you're not, you'd have to get to a 9+ yield on cost to get 100% cash out.
To be able to do that.
The first point's actually important. Like, lenders have historically now starting to taper down on refis. So even like with rates going lower, people are just more cognizant that the whole buy, reno, refi, cash out 100%, put it in the next one, it's just become funny money to a point where now lenders don't want to necessarily get involved with that to bail you out on a refi.
Interesting.
Because you never know what's going to happen after.
Totally. So the dynamics of lenders has affected a ton of the strategy behind the syndication and the investments from the private side, right?
Yeah.
Because they dictate a lot of what happens, the cost of money, again, there's more factors, but if they used to give you 75 and now they only give you 65, that's going to affect some things.
But back to the structure question, I do think it's important to find a structure, like you said, that has alignment of interest, but you also need to know like what your capital is looking for. Some of the capital is looking for quick flips.
Or because if they're double promoting, right?
Yeah.
If they have a promote with their investors,
Right.
then they need to hit their
Yeah.
promote.
So it's just like also alignment of interest of like who your capital is and what they want. Not some people want to invest in real estate for wealth preservation and want to go longer, and that's where you would set up a cash flow structure. Some want the quick flip, get their money in, get their money out. So it's really having that communication and maybe having multiple structures depending on the asset you're buying and the strategy.
Yeah, I find high net worth guys, when things are going good, are kind of bummed that you're selling it because they don't, let's say you sell it in 3 years and you get a 1.6 multiple. They're not so excited.
Yeah.
But they're excited about that check in the mail every week, especially, once you get to 1.6 multiple, hopefully you're at that 8% plus type of cash on cash in today's market. And why don't we just keep that going?
Let's just keep the
and let it ride.
The hose open,
Yeah.
right? And that's not putting any kinks in this.
Yeah.
Dude, that's the dreaded 1031 exchange.
Yeah, what I think what I learned through this rate hike period is slow and steady wins the race. And I haven't really internalized that until now.
How do you feel about when people say my biggest mistake is not selling? Because I hear that all the time, or selling, excuse me. But my biggest mistake was selling assets. I hear that all the time. They're like, if I would have just held on, would have been fine. And there's a part of me that's like, okay, sure. But we've had one of the greatest real estate runs of the last 20, 30 years.
I wish we sold everything in 22.
Yeah, right? Yeah, exactly. Everyone's like, hey, and then these things happen.
We did.
And we sold a lot in 22.
We did, yeah. But
so that feels like it's maybe, glass half full too much of the time because it all depends. It's all dynamics.
The smartest guys I've seen, like there's the guys at Jackson Square have figured out how to hold forever. There's Dean Widener. Do you see Dean?
No, who?
You probably. He's buying all cash deals in Phoenix right now. These are people I don't know, but I'm looking at, and I was like, this guy's zigging when he's buying the best located Phoenix deals at like, mid to high 4 caps, but all cash. He's got the cash to do it.
Totally.
And maybe he's got something, the FPAs, the Greg Fowlers of the world. But a lot of these guys, they figure out how to hold long. I remember meeting, were you with, when like John Sullivan?
Yeah.
And John Sullivan took a house, then he had 5 houses, and then the 5 houses turned into an apartment, and he owned stuff since like 1990. And this guy is, gosh, I feel like maybe I shouldn't be calling out all his information. But, he's driving a modest car. And he's quietly has $500 million worth of deals with no debt on
free.
Yeah. Which is just
and he's owned this stuff forever, right?
Is it in California? Does he have the benefit of Prop 13?
Yeah.
Because that's something that I think a lot of people don't. If California keeps Prop 13, that is something that is so special about California and owning long term. It's because that property tax basis is just like, it's kept there, man. Really. And it makes more sense to own a building the longer you own it than it does as a new person, because that resets.
Totally.
Right. So it's kind of like this. Well, shit, man. It's a better deal for me than anyone who could buy it.
You had a pod where someone said once every 10 years your rents grow.
Yeah.
What was the percent
Kyle.
he said?
Yeah, I forget.
I want to say he said something like big, like a big number, which I think was maybe a little high, like 15%.
Yeah, he was basically like there's these pops that happen, right?
Yeah.
And then it'll be flat a little bit, and then another pop will happen, and then so he's like, if you average that out over the long term and you're in it for those pops, then the numbers start getting stupid.
And you never know exactly when those pops are happening.
It's like
but
the
if you
stock
hold
market.
long term, you're going to benefit from those pops.
Yes, exactly. They may come down a little bit. It's like the stock market, man. The best days, I listened to some Tony Robbins thing he said one day. He's like, if you were in the stock market for you weren't in the stock market for the best 26 days, you'd have like a 75% return versus a 375% return on your investment. It's like those specific days mattered so much.
Yeah.
And you can't time it.
You can't time it.
Yeah.
You just got to be in the game.
Yeah.
And the people who are sitting back and waiting I think, again, you obviously want to be smart with your investments, but it's very hard, especially in Los Angeles.
That's good advice for you, by the way, on the conversation we were having before the pod.
Yes.
You know, you want to be in the game.
Oh, for sure. I know, dude, I know. Trust me, I'm trying to figure my way out there, because it's the brokerage is an interesting business too, because I assume that when you guys get to a certain level in, you know, funds, like you're getting part of the carry and the promote, or at least I hope that you are. Where in brokerage business, you don't really have something that you can sell. There's not something you're building in equity. I mean, unless you get to the top of the top teams, or you have some technology where another brokerage firm will buy you, really you can't sell to anyone. And so the way that a lot of brokers have made a ton of money and wealth is by funneling the commissions and then buying real estate with it. And the tax law is very favorable for what we do, because we get to write off the depreciation of the assets on our ordinary income. So it makes it very accretive to build wealth through owning real estate. And so I've always struggled with that and figuring out, like, what's the best way to do that? What's the best boat? Do you put more money in the brokerage to try to build it up and capitalize on the momentum? Do you build up the team, or do you set a little bit aside and start waiting for that real estate asset? And maybe you're really cash poor for a bunch of years, and then it starts to slowly build up.
You know what's tough about that? Your best years as a broker is probably when the market's the hottest. And so when you're making that decision where it's easier to put that money aside, it might not be the best time.
Totally.
Whereas this year, or 2024 has been one of the slowest years. You don't have money to spare, maybe. So, but that might be the best time to invest.
100%.
So that's where it gets a little dicey.
It's tough. It's a weird dichotomy.
Also, when it's all your money, it's a little hard to scale. It's, you know, it's good to syndicate. It's good to use other people's money. And they benefit, right? They benefit. Look, the people who know the markets the best sometimes are the brokers, right? And then are making the cold calls and are seeing the best deals. So the people who are giving you money to invest in a deal are getting value,
because we have specific
able
knowledge.
to scale. You're able to scale quicker, right? Like, it's hard to look. If you're buying a $15 million deal, you have to have $6 million in equity. It takes a long time to get there.
Let me ask you guys something. From a broker's perspective, if you know a broker, right, and they're buying deals in quote unquote their market, and they show you a deal, does that change your perspective on the deal?
If they also own in the market?
If they're known as being an investor and a buyer in a market?
I think
not really, to me.
But it can be a conflict. Look, we're traders, right? We sell our average hold period is 32 months. It's going to be longer.
Yeah.
Right? But it's been 32 months historically. We're going to give the deal back to the guys who gave it to us, no matter what. You know, we just talked about this a couple of days ago. And so, but it is a bit of a conflict that you have to figure out how you answer. And what I've seen some institutional guys in markets buy sub-institutional level deals. I've seen guys in markets buy deals in other markets, like, or you could just get really good at explaining why you're doing it and how you're going to do it. And try to be as transparent as possible.
I think it's a strange balance, because I've seen both ways. And I get it from both perspectives too. I think you can do it. I know you can do it tastefully and still, because I know plenty of brokers who own a shit ton of real estate.
For sure.
And they're still super active, and they still do a ton of deals. I'm like, okay, so there's a way to do it tastefully.
We respect those guys too, right?
I would say I get that there's a conflict. I totally understand that, but like you were,
I'm not worried about the conflict, but people could.
Some people could feel like, well, if you passed on it,
I think I would respect their opinion a little more if they also own in the market. Like if they're selling a deal and they own a deal, like I'm in the same sub market, and they're giving me their take, their pitch is probably impeccable because they know they own in the area.
Yeah.
And to me, it's like, okay, he owns. I'm gonna do my DD. I'll feel good about it through my own lens, but here's someone that also is an owner and is selling. Like,
so you're telling me to buy real estate in LA?
I think if a 7 cap, you should buy that 7 cap. Yeah,
I think
I'll buy it with you.
Let's say they have a deal and they're overpaying for the utilities, and say, hey, I use this company to get utilities down, use them, take it back out in 3 months because that's going to have this impact.
Yeah, that's value.
Like you could. I think David's doing a good job explaining. You could use it to your advantage.
Yeah, there's
Yeah.
a lot of benefits for being so gritty and deep in that market where you know how to change, 1%, but 1%, a bunch of 1%
Oh,
added
man.
up is
I mean, it's one of the great things about our business because when we get $100
Yeah.
more revenue, at good times we get 13 times, $100,
Yeah.
$1,200, that's 14,000. You multiply that by 100. Now you're talking,
Mhm.
real
140
money
grand.
on just $100 difference.
Isn't that crazy?
Yeah.
It's insane. Speaking of knowledge and getting knowledge, when you guys either go to a new market or one that you've already been in, how do you become that expert, or what resources do you guys go to actually feel confident in the decisions that you're making?
Yeah, I would start by saying it takes us years before we buy our first deal in a market.
Oh, really?
We wish it were faster.
Yeah.
But it's needed,
But
it
that's-
sounds like.
It's not necessarily intentional, but yes, it's needed. We track a lot of deals. Farhan and I have broken into many markets together, and we have seen it's painful at times where you're just underwriting every single deal
Mhm.
for years. And in Colorado, it was a black swan event to finally break in. It was COVID. But we were tracking
Yeah,
that.
true.
They were tracking that market for years. And
We put offers for at least 2 years, right?
yeah,
Wow.
exactly. And that's what it takes though to, we're trying to beat the market.
Yeah.
We're trying to find a discount to market. So we need to first figure out what market is. We need to figure out who's buying these deals. We need to figure out what the cap rates are on our numbers, the real
Mhm.
numbers. If it's a non-disclosure state, that's even tougher because now you have to
Like Texas.
scrap
did.
for
Yeah.
data.
That's where you got to build relationships with brokers. And,
Exactly. Which we broke into that one too. And it's very tough. It's
Yeah.
very tough. We also are vertically integrated. So not only do we want to buy a deal, but we want to scale and get a pulse and have boots on the ground and know things first before the rest of the market knows,
Mm.
which has helped us buy deals. It's also helped us not buy deals because we know we're catching ourselves on a falling knife potentially.
Which is huge.
Yeah.
And I actually just had a situation like that where randomly, and I call and check in on clients all the time, right? So I just want to check in, hey, what's going on? How you doing? And this happened to be a call that I was making. So I called the guy and I was like, hey, what's going on? How you doing? He's like, oh, we're actually under contract on this deal. It's this deal, this deal, this deal. And I was thinking, I was like, wait, that sounds so familiar. Like, wait, what deal is it again? And he told me the address, and another person that I had known was under contract on that deal and found out that there was some shady shit that was happening from the owner. And I was like, are you aware of, like, I think this is the current situation of this deal. And they hadn't released their funds or deposits or anything like that yet. But they're like, really? Like, we looked through all the DD, we didn't see anything. And they went back again and were able to find this discrepancy. And like, dude, thank God. Like,
Yeah.
we would have been screwed if randomly, like, I didn't call them and they didn't know about the situation going on there. But like, that's the relationships. Those are the things that you want to be able to pick up the phone and call someone and be like, hey, what's the story here?
Yeah.
Isn't it interesting in 2025 when we have as much data as we can have, we have AI, we have ChatGPT, we have everything available. Those human conversations are kind of the most important thing. They tell you where to look for the data. Like in Beaverton, I've walked every property over 50 units and have sat with the property managers for longer than they probably wanted to sit with me.
Uh-huh.
And that is gold.
Yeah.
Those conversations are gold. Talking to the property managers. The brokers, honestly, are often the ones who guide us on where to invest. Those conversations are worth a lot. It's fun. When we're first in the market, you get to a coffee shop and you're chatting up the barista. Then at night, you're going to a bar and you're chatting up the bartender. And you're just trying to put it all together and figure out how to. And that takes a long time and it takes a lot of energy.
Yeah.
But it's actually a lot of fun too.
It's a lot of fun.
Right? Like
It
to
is.
understand how the city's working, how it worked traditionally, how it's changing from the people who live in it and, work it and love it or, love it or hate it or whatever.
Totally.
I think it's one of the funnest parts about real estate.
I think that many people in real estate are very competitive, and there's that competitiveness of knowing something or putting pieces together that other people can't. Where you're like, that light bulb moment goes off.
The
You're like,
puzzle is awesome.
yeah, you put the puzzle pieces together and you're like, oh my gosh, no way. Like I figured it out. Right. That's super, super exciting.
We've done best when that light bulb goes off, and then when we do it, like, Beaverton was we were one of the first people who renovated in Beaverton. No one was renovating old product, and then we beat it out. Same thing, San Leandro, beat it out, and then we bought 10 deals right there.
Yeah,
just
because you're like, this works. Boom.
And there's no better info than your own property.
Yeah.
Right. Knowing what's happening on your own property, where people are coming from, what the rents are, how long it takes to lease, how easy it is, how hard it is. It's I think I've heard a few times people say there's insider trading is allowed in real estate.
Yeah, it is.
Yeah.
It's legal. We're not a SEC regulated, I guess, or FTC.
Yeah, we're not cheating. We're not cheating.
It's you're not breaking the law or doing anything nefarious. It's just the truth. Like that is the way that the business is run, and it's a people business. I'm curious to know, are you guys doing any so speaking of AI and tech and where we're headed, because it's crazy and it blows my mind every day, this new stuff that's coming out. Are you guys exploring it, using it? How do you see it affecting what we do?
Yeah, I think
Demo's probably a little better than I am.
we say Farhan sometimes a dinosaur.
Yeah.
But
41, bro.
But Farhan's incredible with the personal touch, right? That's like, which is like irreplaceable.
Incredibly personable.
And
you go to any market, you're going to love it.
And I think I've learned over the years to like, you have to get out of your desk and like make those personal touch, but there's a way to do it efficiently. And I think we've embraced a lot of tools in order to not replace the personal touch, but make it more efficient.
Mm-hmm.
And I think in how competitive the market's getting, you need that efficiency with your time. So like one of the things that I've embraced with our acquisition team is DealPath, and it's a CRM system. It's like a free ad for DealPath right now.
Yeah, whatever.
And
sponsored by DealPath.
They'll sponsor us eventually.
Exactly. So that gives us an incredible pulse on what I was just telling you, like where the interest rates were when we were able to do it and what the bid-ask spread was. Like DealPath is a great way to get in the weeds and like have it in an organized way. With AI, we've been able to, on the property management side, have different softwares to have AI respond to calls, respond to tenants, and just do things in an efficient way that maybe a property manager doesn't have time to do. Again, you're not going to eliminate the personal touch, but that property manager has 50 things going on. So to have AI and these tools and leveraging them in order to respond to quick questions or concerns goes a long way. And you see it with retention at our properties.
Yeah, we've seen that like some of the major REITs are taking community managers off property, doing a lot of it via bot communication and one centralized place that basically manages the data. We're doing it. It's sometimes great. It's sometimes a little wonky, but to start and be there when it's wonky, figure it out when it takes off, you'll get rewarded for it.
It's too exponential of a curve. I've just been
there
diving.
Is pain
super
learning it.
100%.
There is pain.
And it's not
sometimes
there yet.
The AI, sometimes the leasing AI, like there's like the Lisa app folio.
Yeah.
Like prospects wanted to date her, like
wow.
and that's not necessarily as good as some of the other ones that we've been working with.
They're coming out there though. There's a lot of money being, I think PropTech had it dropped really quick, and I think it's coming back because people realize real estate's an old industry, man.
Yeah.
Like we're the last person to adapt all of these technology tools and things because our cycles are so long. And so it's hard to see returns on things when cycles are, the average homeowner, I think, is 10 years now they own a home, right? And that's the majority of the real estate market where the money goes in because it's so big.
Yeah.
But even on the commercial space, that if you look at just the average turnover rate for a property, it's around 3% in Los Angeles, which means the average hold time is close to 40 years. That's a long time.
That's the stat?
Yeah, if you extrapolate that out in terms
You're talking about for
multifamily.
Wow, that's
correct.
so interesting.
Yeah, about
I wouldn't have guessed that.
2.5 to 3% velocity in any market, which if you average it out, it's 40 years, which is crazy, right? And so there's not this. It's a slow old industry, and so if you can find a way to relieve pain for people which is like, why does it take 45 days to get a loan? Like, why? Why does it take that day? Why is there escrow, title, brokers, all this stuff, right? And again, I'm shooting myself in the foot necessarily from that perspective, but there's a bunch of people touching things. And that's a ripe opportunity for disrupting something like that if you can create it. I don't know, and I don't think in the near-term future, because it is such a trust relationship-based business from the principal side and from the brokerage side, that some AI is going to wipe out everyone. I do think it's going to take out the lower rung people, because you're just not going to need it's going to be the people who have it and are good already have all that trust and years of experience and stuff like that built up. Like, it's very hard to overcome that. You have to put in time to build trust. So I'm very interested to know how like the cutting edge institutions are using this to shave, expenses off their bottom line, which then increases their percentage returns they can get their investors. And there's going to be a company that's run by like 2 people that owns billions and billions of real estate. Like it'll be these solo empires because of the tools and their efficiencies, where you don't need a property. Like, this one AI person is going to be your property manager and manage all your buildings, and they can do 1 million responses and reach out to the plumber when they need it, call the guy who needs to fix the floors right there. They're going to know what the most efficient renovations are because they have all the data for what the rents are in the market. It's when you think about robots. It's crazy. It really is crazy. And I think we're in for a very interesting time.
We're probably not that far off.
I'm glad you guys are exploring it, because if you don't, you're going to be left behind.
Of course. I think, I guess while we're still on this subject, AI has turned knowledge into a commodity, to a point where what we have left, and it's becoming, it makes things more efficient, but what we have left is opinions, and like this podcast and sharing opinions on this type of knowledge. And that's where that can't be replaced.
Yeah.
Even with general intelligence of AI, I don't think you can replace real opinions. And so the 2 people that are running the show of the billions of AUM that you were describing, those are the ones with the opinions. That's the power. And they'll be so efficient through these apps and AI and compute, but it won't replace the opinion. It won't replace like what we're discussing here. So that's very important.
There's a Yoda quote in here somewhere.
Yeah. I went full Yoda.
I love that. I love it.
Exactly.
It's true, man. It's a very interesting thing. And I'm excited to see where it goes and where it takes us.
I think we're so early. We're so early.
This is like the internet, like 99, bro.
A lot of my tech friends have basically said one of the reasons real estate tech is slow to adopt is because if you guys think I'm the dinosaur, the guys who are like,
for sure,
with the majority of real estate are much older than I am,
for sure.
And so it was interesting. Did you hear about this? We had an intern come in, and it was a simple thing. We're like, hey, figure out, we have 40 properties and we need to take the credit cards and make sure they're all going to the right place. It was taking people like 2 to 3 to 4 days. He created a macro in ChatGPT via ChatGPT, even though he doesn't know how to build macros, but he knew enough to be dangerous.
Yeah.
And he figured out a way to do it in an hour. And then we checked it. It was a little off, did a couple things, and he did a job that takes 3 days.
Isn't that crazy?
In like an hour to 2 hours.
And you build it once and I mean, it is really.
And then he showed me the ChatGPT, what he was putting in there. I was like, I don't know what this is. Like, no one in our office knew what it was, but it was, he was 20, 21 years old. And, I think that goes to, if you're a young person trying to break into industry, these are ways that if you could figure out problems like this.
100%. That's a great point. I think for young people, because I have a lot of people calling me like, should I be a broker? Should I go into asset management? Should I go property management? Should I join a big firm and work as an analyst or whatever it is? And I think you can do all those things, but if you have this base set of skills and understand technology of where we're at today, like you can add so much value to me, even myself. I'm 28 and like there's this stuff that it's over my head. And imagine a 50, 60, 70-year-old, person who has a bunch of this real estate, and you can come and save him hundreds of thousands of dollars a year by just doing a few things that are not that difficult. Like that's real value. So if you can and learn those skills now, I mean, real estate, I think is going to be, they're not making any more of it,
Yeah.
unless you're in Dubai, I guess, then they're man making all that stuff.
Going underground.
How are you using AI like in your day-to-day? I'm sure with the podcast you're probably using it. And I use AI a lot too on the podcast side. So like, how are you using it maybe on the brokerage side?
Yeah. So it's interesting. I've been exploring a bunch of different things. So anything that I do more than once, I try to figure out if there's a way that I can do it more efficiently with AI. Like that's my barometer, is if I've done this multiple times, let me just mess around with it for a little bit and see if I can streamline that process. So it's a lot of the ChatGPTs. Claude I have found really helpful for writing. It's really good at like being more human, the tone of voice for Claude. So like I'll write something for LinkedIn or something like that. And I'll put it through ChatGPT and Claude and figure out, okay, can you improve this? Write it in a style that's a little bit more persuasive, or write a better hook or something. So it helps me with the clarity of thought in writing something for at least social, which for me, branding is such a big part of what we do, and making it more enjoyable for my audience and the readers. And I'm just scratching the surface. Like if I went super deep into downloading all the people who follow me, you could technically scrape like their profiles. You could figure out what they like, what they care about, these through line puts with the data, and then have something that's almost personally tailored to that individual audience. Like
without doing anything.
Yeah. And it just knows that.
Yeah. How do you feel about that?
So I think that it's extremely exciting and scary at the same time. And what I mean by that is I know who I'm competing against. And I know that very few of them are even scratching the surface of what this is. They're not spending the time. They're not doing this. And I have to be cognizant, because I recognize the power in what it is of not having it distract me from the day-to-day, which I've done a very good job at being able to like make these times where I can explore it. But if you're able to unlock even a little bit of this, like the amount of efficiency that I can get and what I do as a broker will blow everyone out of the water. When I can have automated market reports, automated rent reports directly to an investor, where I know that you're buying in Silver Lake and Echo Park. I know you're looking for 5 to 15 units. You like 1 and 2 bedrooms. If I have a report that automatically generates when a new lease comes up or is leased through whatever platform it is, and it sends it in a pretty package, like I'm doing 50 of those a day, I would never be able to do any of that stuff. And that's value. Like I'm constantly thinking about how I can add value to people.
Yeah.
What's the most valuable piece of information besides deals that you can get that'll either from a broker or someone else that helps you in your job?
Yeah. Data for sure. Just data,
like rents, data,
occupancy, rents for renovated units,
comps,
stories, like what actually happened there. Was there a credit there? Stuff like boots in the ground information.
Or maybe like early on developments,
Is a company moving in over here? Is there going to be $1 billion in Phoenix? That kind of shit, stuff like that. I mean, that if you have a way to have a system that keeps an eye out for what's happening and can analyze all this stuff and make a strong judgment or a pretty strong case that like, hey, we think that X is going to happen, which is going to cause Y historically, which will be good for investing.
Yeah.
Like that's value.
And by having a more efficient process of making all this, it goes back to what Farhan was saying. It gives you more time to meet people in person and foster those like in-person relationships, because you're so efficient in the back office things that you need to do.
Totally.
So that's what's important. I think people shouldn't lose sight of that.
Yeah. No, it's fun, exciting, and scary at the same time. But I'm excited to see where it comes. And I definitely will be using it, and we're already using it. And
we're
Changing the
talking,
game.
by the way, we're talking just like LLMs, ChatGPT,
Yeah.
but we're able to do this podcast
Yeah.
and Deal Flow Friday through AI and like the editing and the automated editing it's able to do. And you're seeing this renaissance in podcasts and this uprising in podcasts because for people to have a decentralized platform to find information where they can listen to you, me, Farhan, anyone, instead of mainstream off the shelf type of info because of the capabilities that AI has been able to bring for us. So
Yeah, I completely agree. AI is changing the game for everything. And speaking of kind of the branding and what we're doing, I'm curious to know from you guys, how much has it changed from building a personal brand as an investor? Because I've seen a lot of investors who have had previous personal brands, like they've raised a lot of money, they've been able to do a lot of deals. How have your guys' perceptions changed on personal branding and getting your name out there and networking with brokers and all of that stuff?
I'll just say one thing. What we've learned is people, again, they want to invest in people they trust. And what I've learned through it is that it's not just about Max and Mitch, it's also Farhan and David and who are the people that are as a team working on these deals. And do I trust the people who are putting from the analysts all the way up to the CEO? Do I trust everyone inputting the numbers there? Do I trust the team? And so I think that's an important part of it.
It's building trust
Yeah.
at a scale that,
So personal branding, go back to personal branding, is like you want to brand yourself to build that trust, not just the company's trust, but who the person is behind the company, and not just the CEO, but everyone on the team.
100%.
So what you guys are doing with both your pods, I think you're creating familiarity, which might make it easier to eventually, earn someone's trust.
Yeah.
Right. Because someone's gonna know how you think about things, what's important to you, all that kind of stuff from, the stuff that you guys are doing. And it's going to pay dividends. Like both you guys are doing awesome stuff. Like I've listened to every podcast that I've done.
I know, dude. You said that, I was like, oh my gosh, that's amazing. I love it.
And it's fantastic. And Demo's running with it too.
Yeah, dude, yours are great too. I love the details. You're so much more like detail oriented than me, and because I'm fascinated by how institutional players think, right, and like how you're structuring deals. Because when I sell a $2 million property, like I don't got to look at an IRR. Like I don't have to run what the costs are going to be for returns, and like the deal doesn't need it, right? But the stuff that you guys are doing, you have to look at every percentage point. And so I can learn from you and the institutional space and take that into what I do, and it becomes even more powerful because then I can have that much more confidence when I'm selling a listing or doing this to articulate to a buyer, like, hey, no, have you looked at this way? Like, here's actually what's going on. Yeah. So I love learning from,
and you get to see that through the podcast lens, right? It would be hard for a lot of people to internalize that through just a conversation. By seeing these podcasts, you get to see how I'm looking at deals, how our guests are looking at deals, and other people that are viewing it, do they see the world the same way? And it builds trust, it builds credibility, and who's behind the numbers. Anyone can make a model spit out a return that you want it to return. It's about who's the person behind the numbers that's going to execute this business plan.
100%. Farhan, how West Coast, California, Los Angeles, long LA, what over the next 10 years, like, are you focusing on trying to make happen with investments in your portfolio?
Oh man, that's such a good question. I mean, we should have these long-term plans. I hope, first off, I hope that I do investments that will, now I have a lot of friends and family that are investing. I did a small deal personally where all my best friends came in.
That's awesome.
You better believe I'm going to knock that out of the park. Hell yeah. And so first off, to be a good steward of capital of the people who are investing with me, so important. I don't take anyone's dollar for granted. That's really important. Now, if we do it right, 10 years from now, you could get to a point where you have enough passive cash flow that you have financial freedom. And so I got into real estate. I wanted to own something. Didn't know what that meant, but owning real estate was important to me. Now that I'm in, I want to have passive cash flow that gives me freedom. You know, there's a lot of things I think and we're talking about that I care about a lot. I want to, you know, if I can make enough money to have passive cash flow, I could, you know, do things for my community, maybe do something in politics, maybe become a teacher. You know, I love restaurants. I'm a restaurant investor. Do more of that. You know, it opens opportunities. I have a 10-year timeline to do it. And I think if I know what the number is that I need for the passive cash flow, I know how much equity I need to get there. I know how many times each of the average deals needs to flip to get to that point. And I encourage you guys, you know, being about 10 years younger than me, to try to figure that stuff out also. Because the earlier you get started, you know,
100%,
the better it is. And I wish I would have got started a little bit earlier, truthfully, but I'm not that old. I just look old next to you guys.
51 and you're making, you know, 50, 60K passively a month. You'll be like, all right,
that's the holy grail, right? It's also to have that financial freedom, and being an owner. You get so many tax advantages with it, right? So we love what we're doing and breaking into new markets and doing and learning. And like, I fell in love with the industry through breaking into markets, seeing how people live, and just the dynamic of multifamily and improving communities. Like, that's what's made me love this job.
The tax benefits are crazy. The power of the 1031, the depreciation, accelerated depreciation, the real estate professional status. And that's not cheating the system. The system's saying, we want you to invest in real estate. We want you to be transactional. We think it's good for the overall economy.
Improving communities.
And we're going to incentivize you for that. The government is incentivizing you to buy real estate, to sell real estate, to trade it, to keep on reinvesting those dollars that you make on it. And we should know that back and forth, and we should take advantage of it.
I know we're all multifamily guys, but I'm curious to know, is there another asset type that you are either bullish on or think has an incredible amount of room to grow, that if you had to start over, you'd be like, that's the one that I'm going to go after?
What do you think?
Oh man, I love retail. You know, like
really
the Rida guys. Do you know the Rida guys? I don't know. I don't know them. I don't know who runs it, but like the stuff that they do to the retail on Sunset is they take these old centers and like breathe life. Are you friends with those guys?
No.
Oh, okay. I feel like
what's the last name?
I forget. Is it? I think you might know one of those guys, but
if I know like the last.
I don't remember. But they see these assets, they breathe new life into it, and they make their neighborhoods better. That's actually what got me into real estate in the first place. So that's like super exciting, you know.
So retail.
I would say retail as well. I have a lot of friends, family, generational wealth in retail, and like obviously that's great, money's great, but like the excitement kind of like of creating a new community is like creating a new experience, and lifestyle retail is very exciting.
You guys are so much better than me. I'm like straight for where the money is. I'm like data centers, data centers, dude. That's data centers, man. There's no fucking way that data centers are not like 10 times more valuable.
I will say this. My dad's not in real estate. We talked about journey, and part of my journey is I actually didn't come from a real estate family, even though I'm a Persian Jew from LA. I didn't come from a real estate
that's
family.
An enigma, bro.
Plot twist.
Right there.
But my dad, he's in manufacturing, wholesale, distribution, and he has a very successful company, but he also bought his warehouse in Vernon. And I would say, I always make a joke, I'm like, that's appreciated more than any money you've made in your company. And that's a beautiful thing. And industrial has done in LA has benefited from that. So from a money standpoint, sure, like I would say industrial, but I would say from just like a vibe general standpoint, like retail, it's pretty cool.
Look at what Caruso's
and
done.
Oh
man.
my god.
Farhan and I are both
Yeah.
foodies. Farhan probably even more of a foodie than I am. So like, not from that.
I gotta get
no,
some
he's
Rex.
he's
LA
actually
Rex
Oh
from
my
you,
god.
dude.
He's an
Well,
investor.
I will
Are
write
you Pizza Pizza? Are you? I had to
you know,
guess.
what's funny is twice in the last like 2 months, someone came up to me thinking I'm not from Pisa Palace.
No way. Pizza Palace. Yeah.
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 It's just so funny.
Yeah.
No, but I'm going to have to ask you for some food Rex for sure. 100%. Dude, well, guys, this was incredible. I'm collaboration podcast.
I love the
talking
collab.
about
This is
LA
great.
and
Really fun.
Miami.
Yeah.
This
I
was
forgot yeah.
Yeah.
This
We
was
should have
great.
had some tequila or something.
I know. It's Friday. It's
in
Deal Flow
Miami,
Friday.
in Miami, when I come out there and we'll do round 2, then we're gonna have some tequila.
Book the flight to Miami, both of you. I'll handle the rest. Tequila on the beach.
Oh,
Maybe, we'll get a little room at 11. Just a recording room in
that's
11.
it.
You
We're just
guys,
gonna
I'm good.
record. We're just gonna record.
I'm not putting that on record.
Yeah. We'll cut that part out.
Guys, thank you so much.
Yes.
Thank you.
Awesome. Thanks, Taylor.